Hello, everybody. This is Bob Anderson, and I know that we're right around the corner from June 1st. Today is May 29th. Okay. So, what I want to talk about for those of you that choose to trade in the summertime is I want to talk about what I am looking for in trades in summertime trading um, with, with the intent of keeping my trade volume down and my risk to reward numbers high, 3 to 1, 4 to 1, something along those lines. Like the trade I took today, that was a 3 to 1 trade. Bing, bang, boom, done. I think I was in it and out of it in 2 minutes. And I want to talk about how I saw that trade, how simple it is if you just pay attention to some what I'm going to show you today uh, on the 5 minute red line. Remember, the 5 minute red line on my charts is really, since I use 1 minute charts, is 105 period SMA, okay, which simulates a 5 minute 21 SMA on a 5 minute chart. So what you're doing is you're trying to integrate a 5 minute moving average onto a 1 minute chart. Why am I doing that? because for the 5 minute traders, I'm trying to use 1 minute candles to be able to see reversals intra bar. Intra bar meaning intra 5 minute bar, so that we don't have to have bigger stops and enter trades later off of those moving averages working if you were trading with a 5 minute candle in 5 minute charts. Okay. It's there's some traders I know that literally go down into seconds using similar scenario of what I'm talking about. Okay. So so what I want to do is I want to go over in detail what I'm looking for with the 5 minute red line trades, because that's going to be the trade I rely on the most through the summer. And then the infrequent overnight open that may set up. Okay. I don't have a time for the overnight open because whenever the overnight open happens, it's worth taking, but they don't happen often. Not where they do the reach after not being that area for a while. Okay. And then the 1 minute gold line, looking maybe 10 to 11. But honestly, they get hard. They get hard to manufacture for entries and targets that reach, like, say, 20 ticks. They get hard to manufacture more and more as the summer goes on. So that's why I'm going to predominantly focus on the 5 minute red line, just like I did today in the trade that I use as my screenshot for this video with the RTY. I'm going to go over the 5 minute trade line setups. And I'm going to explain it so simply that I really think you'll get it. Okay. And I'm going to show you some charts and we're going to walk through, and we're going to be looking at things between 10 and 12 Eastern Standard Time, and possibly 1 to 3. If the market goes dormant, then there's not worth it. But I have a way to keep you out of dormant trades too, a dormant market. Okay, and how this pattern works. Okay, so anyways, I want to go over that in detail because I think it's the piece. I think it's going to carry you through the summer if you plan on trading. Honestly, I can't think of a better way to trade when the market's dead than the 5 minute red line. And the one I took today in RTY, yeah, it took me until 10:35. Now, granted, I took the first version of it at 10:05, and it ran up and came back, knocked me out at even. No harm, no foul. The trade was perfect, but it just didn't work. Then they did another one that did work, and didn't meet my rules, even though there's some idiosyncrasies to my rules that are difficult to implement on a 5 minute moving average with a 1 minute candle. And I'll go over that here in a minute too. And then the third one that set up absolutely perfectly. I hit it, boom, and this is exactly what you want to see, in my opinion. You want to see price go through that. You want to see price go through your entry, your buy, for example, on a long. You want to see it go through there and never look back. Just wave at it like a SpaceX vehicle going up into orbit. And then when that happens, you want to know where to put your targets and things like that, so that you can get the most out of it. And so I'm going to go over those things right now in detail in this video. I really hope you pay attention, because I'm being perfectly honest. This is exactly how I am going to trade through the summer. Okay, here we go. All right, so let's talk about the 5 minute red line. Okay, and let's talk about what I visualize as being the opportunities to take trades. So I like to let the news go by. I like to let the market with its fun and games go by. And I like to then start, so I'm talking about normally after 10 o'clock to about maybe noon with the 5 minute red line. I like to let the market show me if it has, trade potential for this trade. So one of the things I want to talk about is like, okay, is the market respecting my 5 minute red line? Well, heck, look at this. At 9:35, when the market opened at 9:30, of course, went down, created new lows, came right back up, boom, hit that 5 minute red line, pushed it right back down. Did it get it to a new low? Nope, didn't get it to a new low, which that meant to me when it came back up here and sat here, they were going across. Okay, because you can see the steps. You can see the stair steps. Here's the pivot to down here. Okay, here it is right here. Here's the pivot to down here, and we broke it on the way up. But the strength of the 5 minute moving average is so strong, it pushed it back down. It just didn't push it all the way back down because the step is from a higher spot. So it rotated here, came back up, and that means it's over. 10 o'clock in the morning, it crosses right through, creates a new Donchian channel. Let's talk about the Donchian channel. I had somebody ask me in a previous video, was this Donchian channel something new to you, Bob? No, it's the instrument, the Donchian channel is. The concept is not. I have always said that you should be looking to your left for the last 60 minutes or more and see if you've created a new price zone. So if you have created a new price zone, either to the south or to the north, whatever it is, then you look for that pullback into your moving average that you trust based on the time of day, blah, 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 blah. And you take that trade back to those zones, back into that zone, because most likely the market is then looking. The reason it pierced one way is because it pierced, got the people chasing, cleaned them out, rotates, keeps going back. So we're going to see some examples of what I was seeing today. Okay, this is the RTY. Then I'm going to close this down, and I'm going to grab, I think, some NQ charts and some gold charts and show you some more examples. It's kind of hard because I got to flip through days, and I want to focus on 10 o'clock to say 12. Okay, but anyway, so 10 o'clock, boom, we go through. What do? We create a new Donchian high. What does that Donchian high mean? It means that we have, with this new pivot, we have created a new 60-minute high. Just like right here, we created a new 60-minute low. Why did we not take this trade? Because it's not in our time zone. This is before 10 o'clock. It's near the open. I stay back and let all those, things going on there, kind of maturate before I get involved. So we created a new Donchian high. Now I'm looking for a relatively smooth pullback for the 5-minute red line, an obvious smooth pullback for the 9 EMA. This was a 9 EMA smooth pullback. I mean, you can't get any cleaner than that. I mean, high, lower high, boom, gone. Now, I squeezed my stop up here when it ran up, came back down, knocked me out, even. No harm, no foul. No harm, no foul. So, what am I looking for? Well, I'm in my trade zone. I need to hyper focus predominantly between 10 and 11. I want to hyper focus. I've got my 4 charts up. I want to find what does the next couple things that I'm going to talk about. What are those next couple things? Well, first off, a new Donchian high or Donchian low. Here's one right here. And then I want, because I'm truly focusing on the 5-minute red line as we get into the summer, because I want those deeper pullbacks and those bigger time traders, the 5-minute traders, to then help me meet my targets. Okay, so to accomplish that, I need to see Donchian high or Donchian low. Okay, which here's the Donchian high, and then a pullback to my 5-minute red line. Now, I didn't take this trade. Why did I not take this trade? Well, by the way, this is a relatively smooth pullback, because you got to remember, these are 5-minute candles that 5-minute traders are using when they're using remember, this red line is a 5-minute moving average that I've blended into my 1-minute chart, so that we're taking trades off of 1-minute candles. So we're getting in earlier. We're not having to use bigger stops and bigger targets because of bigger stops and all that stuff. We don't get caught up in the wash of that big 5-minute candle. We're trying to zone in on that candle and see the dynamics inside that candle. So we get in earlier. Okay, that's what we are trying to do with a 1-minute candle on a 5-minute moving average. Okay, so why did I not take this trade? Because this darn thing here opened and closed completely below the red line. Now, obviously, you can look at this and hindsight tells you, oh, well, Bob, you missed a good trade. Yeah, but I'm trying to stick to my rules. Okay, and my rule is to not take a trade on the wrong side of a moving average. Now, why did the trade work so damn well? Well, it worked so damn well because in reality, this is a 1-minute candle on a 5-minute moving average. So the mere fact that this candle opened and closed below that moving average, 5-minute traders don't see that. They're just seeing the formation of their 5-minute candle. Okay, so, did I miss the trade? Yes. Am I upset about it? No, I mean, I was actually at the moment, but let's keep going. So we create a new Donchian high right here, and then a much smoother pullback, a deliberate. Now, the thing about the 5-minute red line, you really, if you're going to trade this strategy between, say, 10 to 12, you really want a deliberate, and I mean, I'm using that word vehemently. You want a deliberate pullback, because you want the market makers to be cleaning out those. Remember, here's what they did up here. What did they do up here? They caught the people that are chasing trades. They caught them chasing the top of that consolidation zone, that 60-minute consolidation zone. They did it right here. They trapped the people breaking out of the 60-minute consolidation zone. They trapped them, slammed it down. They did the same thing here. They trapped them, slammed it down. Now, do you want to be the guy that got trapped? Or do you want to be the guy that sits there and laughs while it's happening because you know what they're going to do next? I like being the guy that's going to laugh. All right. So what does that mean they were going to do next? Well, that means the market makers were going to move it to an area, okay, and then they were going to rotate it again. I mean, it's all part of moving price one direction or another, moving price one direction or another. They're doing that intentionally with direction, with a purpose. So when this thing went from here to here, back to this moving average, I took the break of it, boom, boom, and I had my target up here what all this consolidation was. Bam. Done. Just like that. That's it. Done. Okay? Now, what can I do from this point forward? Well, it's pretty simple. See what happened here? This just happened to stop here and rotate back. Well, that means if I'm sitting here looking at the RTY and now it's 1040 and it's back over here, there's nothing going on here because we didn't come from a new Donchian high. And as a matter of fact, we didn't even go back up and pierce the Donchian high, which right there from this trade here, which right there tells you that the trade is over, that the long is over. Just like it showed you here that the short was over. When it came down like this and never broke down through that and came up, that meant the short was over. Well, same thing on the long side. It meant the long was over. Okay? So that means we're done. We're done. Now, what I'm going to do is I'm going to grab an NQ chart and I'm going to grab an RTY chart and I'm just going to randomly look through days of the last, week or so. And I'm just going to literally show you these exact patterns. Okay? But that's what I did today, May 29th. Okay? And that's exactly how I'm looking to make it through the summer. Okay? So let me get some more charts up. Okay. Let's talk about this same thought process with gold. Okay? So, we'll be looking for trades after the market opens, so after all the noise and hopefully gold takes a side, long, short, whatever, and we can kind of trade off of it. Okay. So here's gold, for example, on this day. I think I've talked about this day before. I specifically remember it because it if I hadn't talked about it in this channel, this is a perfect day to talk about it because it shows you the power of the Donchian channel. So see right here, we have these Donchian channels from, 9 o'clock, 9:30, whatnot. They're not being pierced. Price is just hanging out. Then all of a sudden we get a Donchian channel long and a beautiful smooth pullback right to the overnight open. Bam. That's why I say the overnight open doesn't have an actual time on here. That's the pattern right there. You see that Donchian channel get hit one way, or if price stays way up out of zone and then comes down and hits it, this is the price action you're looking for. Smooth, 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 smooth. Right there, boom, bam, reversal. Gone. And that right there, for example, in gold from here back to here, which is back to the Donchian high, I mean, you're looking at just that simple thing right there. You're looking at $300 a contract. And all you had to do was not touch these buttons, not look for those reversals or those signs until you saw the market prove to you that they had picked a direction, that they had trapped the people going long out of the consolidation and deliberately drove it back to one of your known pivot spots that I've talked about, either the 9 EMA, the 21 SMA, which is 105 SMA on a 1 minute chart, or the overnight open. I mean, it's just beautiful if you just learn that rhythmic pattern. And I mean, you can't find a smoother $300 trade than that. I'm serious. You can't find a smoother $300 other than maybe the one I took in RTY today. That was obviously smoother because that only took 2 minutes. But so if you slow your roll until you start seeing these Donchians getting pierced one direction or another, it'll keep you out of all this garbage. And I mean, that right in and of itself is so important. So, anyways, have a reason to enter the market. Okay. So let's keep going now. We're creating Donchians. And then all of a sudden, wham, we went from a Donchian high straight back is as deliberate as you could possibly get back to the 105 SMA on the chart, which is really a 21 SMA for 5-minute traders. And bam, off it went. I told you guys, hands down, I would have gotten knocked out on this trade at probably even. Once it slammed up here, came back down, knocked me out. Even, small loss, whatever. But let's not give up. Let's not give up. So let's see what's going on. We rolled back over. It didn't create a new Donchian high, so I wasn't paying attention to this because, again, I want to follow rules. I want to know confidently why I'm taking this trade. I want to know what I'm doing simply and rhythmically and routine. So it's the same way over and over again. I want the reaction to be like that, deliberate in a direction. So I want to consistently take the trades like this one deliberately was in the direction at first. They came back down. I mean, they do that. They clean out stops. I mean, it is what it is. But this one didn't create a new Donchian high, had a nice smooth pullback. Otherwise, I mean, from here to here, that is a really smooth pullback for a 5-minute moving average. I mean, that is a really smooth pullback for a 5-minute moving average. Every candle had a lower high, except this one right here, which was already onto the 5-minute moving average anyways. I mean, it was actually pretty good in that respect. But I didn't take it, and I wouldn't have taken it because it hadn't done this, but it worked perfectly. So do you get upset? No, I mean, you could get upset, I guess. And plus, it was also after 12 o'clock. Okay, that's another problem. By the time this one hit, it was after 12. When this one hit, it was 11:30. So you hadn't gotten to 12. So after 12, I kind of try to stay out of this stuff at lunchtime. Okay, so we're looking to potentially maybe something after 1 o'clock. So let's see what happens. We create a new Donchian high. We're at 1250 here. Donchian high, pull straight back. This is a nice Donchian high. Look at that smooth pullback. Again, for a 5-minute moving average, that's a beautiful smooth pullback. For a 1-minute moving average, that's not a smooth pullback. For the 9 EMA, for example. Anyways, but we're not worried about the 9 EMA. We're way past 11 o'clock. Okay? So now you got to sit here and think about it. It's let's see here. This is 1253. 1254. It's almost 1 o'clock. You got a Donchian channel. You've rotated up once here and another time here. See how they trapped the people up here and ran it down here? That's listen, if you can start recognizing when they have people trapped and when they're cleaning them out, you'll start recognizing when they're reversing it back. I mean, it starts becoming very clear to you. It really, to me, it does. It just starts getting clear. You start seeing the signs so that you're not the one that's getting in at the wrong time. You're the one getting in at the right time, because that's when the sharks are trading. Okay? And that's what you're looking for. You're looking to be that shark. With that shark, I should say. So let's just, I mean, to me, this is a beautiful setup. I think it worked. I think it did. Oh, okay. Now we're at 1255. Boom, boom. Wow. Oh, yeah. And then this should go all the way back to the daily high. So if we're talking about gold here, you're looking at 1250, $451.50 is your in price. Your out is 454.5. So that's what would that be? That'd be $400. There you go. There you go. Look at that, man. That thing took off. Holy cow! Did we get another one? Well, now we're after 2 o'clock. I wouldn't be looking. No, see now we started. See that this is where the pullback is not smooth anymore. Even if this thing rotates back now, you had this pull down, pull up, pull down, and then pull up. This thing, this one right here pierced this one right here. I mean, these are going to be ugly looking 5-minute candles. You don't want to be involved even if that comes back. But if you can learn how to recognize this type of a pullback into your 5 SMA, where you got your Donchian high and your smooth pullback into your 5 SMA and you take your break. If you can learn how to do that and learn how to be patient enough to wait for that Donchian high, pullback, rotation like that off of that 5 SMA, you will probably have a profitable summer. And I'm telling you, it's so simple. Either the end of this week or early next week. I don't know yet because I got so much stuff going on. I'm going to do a video about a tool. It's a free tool that I've been using lately to help me trade 4 charts at the same time with my trading style. And I've been using it for a little while. It's an entry tool, and it's really simplified the pullback long process for me. And so I'm gonna do a video and talk about that because one of the hard parts is that I get a Donchian high here in gold, and I get a Donchian high over here in oil, and I'm kind of looking at both at the same time, and then I'm trying to put orders on the charts and things like that. So I used a tool a while back, and it had some problems, and the developer had been working on fixing those problems, and he's now got a version that really works. I've been using it on live trading, okay, with live PA accounts with Apex, and it's been working wonderful for me. So I'm going to probably do a video about that thing, and when I do the video, I'll have a free download on how to use it. I'll give you an idea what my settings are. Really, I'm using it to get into trades. I'm not using it to manage trades. But anyways, it follows where your entries should be on these candles as these candles close once you've made the determination that this has met your rules. Okay, so you don't have to keep moving your potential entries. It'll do it for you. Okay, so anyways, everybody have a good day. I will talk to you later, and keep your trading positive. I've had a pretty good week. Let's see here. Today's Wednesday. Is today just Wednesday? Yeah, today's just Wednesday. I say I had a good week. Hell, I only traded 2 days. Well, all right. I've made $1,000 in 2 days per account. So that's a good day. This is a good week. Anyways, everybody have a good day, and I'll talk to you later. Bye.